Hi, Assalamualaikum and a very good day to our dear lecturer, Associate Professor Dr. Norziatun Ismail Khan and fellow friends. Today, we are from Group 2 will present about Aroma accounting scandal. Next, here is the list of our group team members, which are 6 in total. Next, our representative presenters for today are Liana, Zubaida and I'm Farhana. Now we look at the tables of the contents. There are executive summary, 4 issues, and lastly is the conclusion. Next, now we look at the executive summary. As we know that Aroma is a transnational grocery and merchandise retailer in Great Britain, United Kingdom. It was a top 4 market leader of grocery in the UK. As in 2015, the board director of Aroma consists of 12 members, which 10 of them is non-executive directors and 2 of them are executive directors. And only 2 had knowledge and experience in the retail of the company. Now we look at the timeline of this case. In May 2015, KMPG has raised its concern about the accounting uncertainty over commercial income and how Aroma met its sales objective, but it was pursued by the audit committee. On July 2015, the existence of a whistleblower, which is ex-employee, had raised the issue of accounting scandals, that the company had manipulated 277 million of the profits. On 7 October 2015, the Financial Conduct Authority (FCA) had a full investigation to determine whether Aroma had broken the financial disclosure rules and released false and misleading statements to the stock exchange. On 27 October 2015, Ernst & Young issued a report on Aroma's accounting misstatement after the investigation had been made, and on December 2015, the Financial Reporting Council (FRC) had entered the ongoing investigation. Lastly, on the 7th February 2016, the Groceries Code Adjudicator entered the investigation in the Aroma accounting scandal. Alright, now I will pass to Liana to present about the sum of the issues.
Okay, thank you, Nurul Ain. Now we move to the issue number 1, which is to know whether the accounting scandal happened due to the inefficiency of Aroma's corporate governance. So there are 4 weaknesses that we found in this case. The first 2 weaknesses is relating to the board of directors and another 2 is related to the auditor. So the first weaknesses is lack of retail experts in the board's compositions. There were only 2 directors on the board who had knowledge and experience in the retail industry, who were Elliot, the CEO, and another one is Nicholas Ng, the CFO, that caused concerns about the knowledge and competency. So there are 3 recommendations that can be taken to solve this problem. The first one is the board should have at least half of the board expert in the retails of Aroma so that it can help them to process collected knowledge into the skill, improve the value of the customer certification, and create value that competitor cannot imitate. And then the second one is Aroma should improve the importance of corporate governance by setting the right tone for senior management and fostering a positive organizational culture. And lastly is the corporate governance framework should underpin the board's accountability towards Aroma. Otherwise, the board of directors is responsible for establishing accountability for company management, assuring the reasonable internal control through independent third-party reviews of the company. So, according to the Financial Reporting Council, FRC, a successful company is led by an effective and entrepreneurial board, whose role is to promote the long-term sustainable success of the company, generating value for shareholders and contributing to wider society. The second weakness is Aroma had broken the financial disclosure rules and released the false and misleading accounting treatment. So they have a poor quality of management information, such as inaccurate or irrelevant information. Aroma had breached the authority's listing rule 1.3.3R in Financial Conduct Authority (FCA). So there is a lack of transparency in Aroma financial reporting and illegal alteration of a company's financial statement in order to manipulate a company's apparent health or to hide profits or losses under accounting fraud. So the recommendation that can be taken to solve this problem is Aroma can establish a market reporting team, MRT. So what MRT do? MRT is responsible for monitoring the quality of transaction reporting data. They also in charge of specialized supervision of the business's compliance toward the transaction reporting requirement, as well as the formulation of transaction reporting standard and instrument reference data. So based on Article 26, Subsection 1 of UK Markets in Financial Instrument Regulation, the investment firms which execute transactions should report complete and accurate details of such transaction. So to comply with this act, Aroma should establish MRT. So the third weaknesses that we found is the rotation for external auditor takes too long. KPMG engaged as an auditor for 30 years. So here we can see 30 years is too long, isn't it? So it can lead to the familiarity tree. So the recommendation is, under regulation implemented in 2016, every 10 years, all public interest entities must tender for a new auditor and their auditor must rotate after a maximum of 20 years. Aroma also should minimize the rotation of the external auditor, which should not be more than 20 years. This is to prevent the familiarity trait due to the long relationship with the client. So of course, the audit firm, KPMG, should not do the auditing in the client company for a long time. Now, this is relating with the Financial Conduct Authority (FCA) that states that there must be rotation of the auditor to avoid any conflict of interest, because the conflict of interest or perceived conflict of interest may arise in various ways. And then the last weaknesses that we found is about the ignorance of the audit committee. As KPMG raised their concern about the uncertainty of Aroma's commercial income statement, the audit committee pursued KPMG that commercial income is not compulsory to disclose in the audit report. So we can say that there is a non-independent of the internal audit team, and also there is a lack of transparency in Aroma financial reporting. So the recommendation that can be taken to solve this problem is Aroma should improvise their policy in hiring the competent audit committee in the board of directors that should give attention to the 5 key factors in enhancing the effectiveness of the audit committee. Here the 5 key factors, which is first, audit committee transparency, and then effective communication, committee composition. This one is include appropriate skills, competencies, and expertise. And then how it gets its work done. This one relating to the efficient and effective way of working. And the last one is strength of the finance function. So all these key factors are based on the identification highlighted by IFAC's professional accounts. So according to the Financial Reporting Council, FRC, the audit committee should support and advise the accounting officer and the board by providing oversight of the company's financial reporting process and use of public funds, corporate governance, the audit process, the system of internal control, including the business continuity and information technology, the identification and management of the significant risks and its compliance with law and regulation. Next, I will pass to the next presenter to continue on issue number 2.
Okay, thank you Liana and Ain. So, for the issue number 2 is about whether the regulators and stakeholder function well in curbing the accounting scandal. We go first, the role of regulator have 4. First is Financial Conduct Authority is to prevent misconduct by company. FCA also had a full and thorough investigation on Aroma financial statement to determine whether Aroma broke the financial disclosure rules or released false and misleading statement to the stock exchange. Next is Grocery Code Adjudicator. To encourage and monitor compliance and investigate whether Aroma have broken the grocery supply code of practice. The third one is UK Serious Fraud Office is to investigate and prosecute serious or complex fraud bribery and corruption. And SFO, we take over the investigation from FCA to detect any fraud or corruption case in Aroma. And the last one is Financial Reporting Council to ensure that misconduct on the part of the PIA auditors and register a responsible person are detected. And FRC will examine the conduct of Aroma auditor, KPMG and Aroma account for the year 2013 until 2015. Next, we go to the role of stakeholder. First is board of director. They have to be responsible for misleading on financial statement and cooperate with every investigation run by regulator. And they have to suspend the 3 executives in Aroma who involved this scandal and call them to assist in investigation and launch internal inquiry at Aroma by appointed a big accounting firm, Ernst & Young, EY, and famous law firm, Funfire. And last but not least, board of director must hire new finance director, Alex, who come from Farnham and Manson to provide assistance to the external investigator on investigation of the inflated profit and accounting misstatement. We go to the next role of stakeholder is accountant. Accountant must be responsible to reveal about Aroma accounting problem to the upper management. They cannot hide the true and fair, and they have to present a full and complete report about the $2,077 million accounting scandal to the new CEO direct. Okay, we go to implication after investigation by the regulator to Aroma. Aroma will add a major restructuring. They have to appoint 3 new non-executive directors with a background of retail industry. They also have to improve the effectiveness of the board with a new director that have full professional skill and experience. Board of directors must be alert on corporate governance issue, board and regulator roles in dealing with the accounting scandal and the pressure from the public. We go to the second implication is reputation damage in Aroma. The intentionally wrongdoing by the company leader will lead their bad reputation to Aroma, from the book manipulation where they record the accrual profit earlier and delay the record of expenses or of cost accrual. So the 3 main competitors, Asda, Sainsbury and Morrison, with the very good reputation and very known in Britain big supermarket with a good reputation, we take over all the customer from the Aroma. So we go to the third implication is lost the public confidence. Only 1 female non-executive director left in the board after 2 female directors decided to resign. So Aroma may lose customer who had less confidence toward the company after accounting scandal, and the share price for Aroma will drop sharply around 11.7% to 207.5%. We go to the last implication is legal dispute. Of course, Aroma will face future legal action either from investor or other that are affected by scandal. This can lead to years of investigation, especially when involving a lot of parties. That's all for issue 2, and we will go to the issue 3. It's about whether Aroma has a good relationship with their supplier. As we can see in these cases, the Aroma and their suppliers are not in good term because Aroma always deferred the payment due to their supplier. For example, Aroma took 3 years to pay back to one of their supplier, and Aroma was taking advantages to their supplier. Okay, Aroma also is attempting to earn a lot of money through a wrong method, such as charging a greater sorting fee, charging the supplier to provide a lot of reward to stimulate sales, and despite the fact that sales are still not happen yet. So the commercial income will be paid in advance to Aroma by the supplier before the actual sale took place. For example, we can see from this issue is Aroma is unfair and selfish to its supplier because it includes many types of payment for commercial income from the supplier in advance before the sale are made. Okay, that's all for me, and I would like to pass to Ain for issue 4.
Alright, thank you, Zubaida. Hi, back with me again. Now I will proceed with the issue number 4 from this Aroma case, which is to know whether Aroma can rebuild their reputation in the market after the accounting scandal had been occurred. There are 4 solutions to rebuild Aroma's reputation. First is improve the company internal control by providing adequate training to the staff continuously, consider changes in the business environments, review and approve any transactions performed, develop written policies and procedure that has been improvised, and ensure that all the duties are all segregated. It means that if we do the segregation of the duties, no single employees have control over the multiple tasks. Next, adopt a new organizational culture in the company. As for this, Aroma should educate all their employees and organization on the importance of the integrity, honesty, and normalization toward the whistleblowers. It is crucial for them to maintain a good reputation of the company with the less issues and manipulation. Aroma also needs to appoint a much more competent and skilled personnel and the top management. Third is Aroma should improvise and restructure of the financial of the company. So that Aroma should first settle down all their debts to the suppliers so that they can improve their credit rating status. And Aroma should only focus on the main activities, especially the activities that are profitable by eliminating those that make losses. Next, Aroma should engage in corporate social responsibility, which is CSR programs. Since Aroma has portrayed the bad image due to this scandal, they should enhance or bring back the company's positive image by involving in the CSR programs. By involving in the CSR programs, this will surely show that the community how the company truly cares about its stakeholders. On the other hand, it will also ensure accountability and the transparency of the company financially, as well as it can gain trust from the public. Lastly is, next, strengthen the importance of the good corporate governance by by 3 ways, which is first, ensure a suitable board. Aroma should elect directors who are qualified, skilled, competent, and able to understand the business roughly. And Aroma should strengthen the control toward the boss, which is possible shortcomings, which will allow them to make time improvements. And lastly is prioritize the risk management, which is Aroma should establish a conducive and effective risk management process, which will be reviewed from time to time for improvement purposes. Due to that, any backup plans or disasters are on the track. Alright, so as for conclusion, Aroma accounting scandal occurred because of the poor corporate governance and the issue of the aggressive commercial income accounting. So that to develop a positive relationship with suppliers, Aroma should establish a strong and positive image in the industry, and it's must for Aroma. So Aroma should be more professional and honest in negotiation with the suppliers to make sure that their image is always positive and in a good condition. So that's all from us. Thank you.